So your neighbors pull in today with a brand new car. They got the $50,000 car, they got all the bells and whistles, they got the nice wheels, nice color, everything looks brand new, it's shiny, you go into it, it smells great. But what is that car really costing them? I'm going to show you a chart that's going to absolutely blow your mind, and it might even make you want to sell your car right now and go get something else. This right here is a difference of $4.7 million for the average American. So if you have a car with a car payment, this will be the difference of retiring or not retiring. This is what all the dealerships, they don't want you to know this information, but I figured this out and I'm going to explain it to you right now. So according to NerdWallet, the average monthly payment for a new car is $734 per month and $522 a month for a used car. That is crazy. I don't understand how the typical American can afford a new car. So I'm willing to bet that most Americans cannot afford their new cars. So most people are going to say, I'm going to pick up overtime. I'm going to work 6 days this week instead of 5. All to pay for this car, all to pay for this thing that gets you from point A to point B. Not only that, but the interest rates are crazy on cars. 6.8% is the average interest rate right now on new cars and a whopping 12% on used cars. A little interesting stat right here is that the credit score of new car buyers is higher than used car buyers. So right now I'm going to go into a compound interest calculator to show you the true cost of owning a car. Should you buy a new car? Should you have payments every month? Should you lease a car? Should you go pay cash for a car and invest the difference of money? We're going to break all that down right now, so here we go. So if you go on Google and just type in compound interest calculator, this is one good website that comes up. So we're going to plug in this information and we're going to do 2 scenarios. So here's the setup right here. We're going to do a new car versus paying cash and you invest the difference of your monthly payment. So as we just saw, a new car payment is $734 per month. And we're going to make an assumption that you're going to lease a car for maybe 3 years, but you're always going to be having a lease payment every time your lease is up, which is what most Americans do. They go get another car. So we're going to do 40 years at $734 a month, and we're going to see what that spits out. So this right here is the total amount of money that you're going to pay for your cars over the course of 40 years at a $734 per month car payment. So now we're going to head over to my compound interest calculator. If you just go on Google and type in compound interest calculator, any one will pop up. This is usually the first one that pops up for me. So we're going to plug it all in right now. So we're going to do $734 per month. Remember, that's the average car payment in America right now. And we're going to do that for 40 years. So we're going to be able to calculate how much money you would have made if you would have put that money for your car payment into the stock market. Now, the estimated interest rate is going to be how much money I expect to make per year. So historically speaking, the stock market does roughly 10% per year. So this right here is a chart that shows you how much the S&P 500 makes in the time frames. So 5-year spread is 14%. 50 years is actually 11.8%. So the returns on the S&P 500 are actually higher than what I'm actually plugging into the compound interest calculator. But I just want to do it on the conservative side so that we can see what it really comes out to be. So right before I show you the mind-blowing number, just remember, the amount of money that you're actually putting in to pay for this car is $352,000 out of your pocket. That you could say is your cost basis. So when I show you this amount of money that you would have made if you would have just put it in the S&P 500, $734 per month for 40 years, it's going to blow your mind the difference. But we have to do one more thing because we're going to do cash and invest the difference. So let's just say you get a new car every 10 years and maybe you spend $10,000 on a car every 10 years. So that's a total of $40,000 that you're going to be paying for your cars. So what we'll do is we're going to subtract $40,000 off of this bucket right here so that we could get you an accurate return factoring in buying a new car every 10 years. So let's head over to the compound interest calculator and see what we got. And then the last part before I show you, we are going to compound this money daily because the stock market compounds daily. That's how compound interest works. So we got to have that one. We hit calculating, and let's see what it spits out. So just check this out. It totally blows my mind. I honestly didn't think it would be this much money, but look at it. In 40 years, you would have $4.7 million. $4.7 million. And the assumptions that we made are you put in $734 per month for 40 years and you make 10% per year. And I even went conservative on this 10% number. So really what the stock market did in the last, 40 years, we'll put in the middle, we're going to say it's roughly 11.1%. So if we put in the accurate return, 11.1% of what it did, we're going to hit calculate. Watch this number. It's probably going to be $6 million. Wow. So $6.6 million is how much money you're actually paying for your car. That is the time value of money. That is the opportunity cost of having a new car every couple years. If you stick with that payment of $734 for 40 years, your car better be worth $6.6 million to you. You better really, really love that car. So let's hop over to our sheet real quick to get the final numbers. So this right here is the difference. So $352,000 is what you put in when you pay for your car payments, Or if you just take this money right here that you put in and you put it in the S&P 500 and you get a 10% annual ROI, you will have $6.6 million. Now we have to subtract this and this from it to get the total return. So I'm doing this on Google Sheets, so I'm going to show you how you do these formulas on Google Sheets real quick. So if you just type in equal sum, we're going to do this minus this, right parenthesis, what do we come out to? $6.2 million. That is the difference of investing your money versus getting a new car every couple years and you have that car payment forever. I get it that people are going to say you need to have a car, and I get that, but you don't have to have a car payment of $734 per month. Also in this car payment right here, this is assuming $734 per month on year 40. Cars are going to be way more expensive in the future. This car payment is probably going to be $2,000 a month, but I'm assuming $734 a month. So that's going to make this number right here be even more drastic. So I have so many friends out there right now where they go out, they get $1,000 a month car payments, but they have no money invested in the stock market. I'm like, dude, what are you doing? You're paying $1,000 a month for this car that goes down in value. Literally, my one friend, he just bought a car for $75,000. He drove it off the lot. The next day, it's worth $65,000. He lost $10,000 in one day, and he's paying $1,000 per month for a car payment. Imagine if you'd be putting $1,000 a month in the market for 40 years. It would be astronomical, these returns. So you have to ask yourself, is my retirement of $6 million worth buying a new car and having a new car every 3 years or every couple years whenever your lease payment ends up? For me, the answer is a 100% cold hard no. Do not do this. I strongly don't recommend that you guys do this. I don't care if you get a 0% interest rate. I don't care if you claim you got a good deal. So you guys have to realize that Vegas was not built on winners. Vegas was built on losers. They have these huge casinos. They look beautiful. Who paid for those casinos? You did with your losses. Just look at all these auto dealerships. They look beautiful. There's people everywhere. They're super nice inside. They love giving you water. Those car dealerships are built on making money from you. So don't let them manipulate you in that you're getting a good deal. All those car salesmen that are there, they all go through sales classes. They all go through classes to try to manipulate the buyer. They want you to feel like you're getting a good deal, whether you're getting a good deal or not. So don't fall for these tricks. So this is a different type of video than I usually make, and if you made it this far, thank you. But I think this is a really important thing that a lot of people have to know about. There's big stuff coming out right now for investing with Brandon. I have a course that comes out in the middle of October. It's going to be everything stock market, stock options, full-blown tutorial, exactly how I make $20,000 per month. I have over $2 million invested right now. I had nothing 5 years ago. So I'm going to show you everything how to do that. There's a link below in this video description to get on the wait list for that. Also, if you want my free stock market blueprint, there's a link below for that too. And if you made it this far, like, subscribe, and I'll see you guys in the next one.